Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Tuesday, and you know what that means. We bring on Omar, the real estate entrepreneur. How you doing, buddy?
Good. What's up, Michael? What's up, everybody?
How much, man? So the first video we're going to do probably for the next year is just
I
an
love it.
update on the high desert, right? For me, it's an important market because the high desert leads California, right? I can get a sense in Fresno by understanding what's going on in the high desert. It reacts first. It reacts with the greatest variation. So what's going on in the market? I think last week we were at like 1,086 or 1,087 listings. Where are we at now?
We're officially, as of the 12th of June, a few days ago, 2 days ago, 1,142 houses for sale, or just properties for sale. Yeah, single family.
Wow. So that's a 5% move in a week. That's inventory is piling up, and this is coming, right?
It's scary, man.
In a week, you got 5% more listings in a week.
1142, Michael. I'm just, I'm taking notes like we always do. 1142, and we are at 158 new listings.
Okay.
118 solds.
Okay.
93 pendings.
All right.
And 57 back on markets.
Yeah. The one thing, again, as investors, there's a couple of places that I would hunt, right?
Back on market.
I hunt. The first thing I've already told people is I have changed my search from first day listings to 15 days. I will very soon change that to 20 or 25. The second thing is exactly that. I want to fish with back on markets. Why? You don't know for sure. Maybe the listing agent will tell you, maybe they won't. Usually there's a reason why. It didn't appraise. The buyer got cold feet. There was a condition, something. I am fishing for better deals. I am only doing great deals. So I want to fish where my chances of motivation go up. Days on market, back on market, hunting ground, go to work.
You know what? Let me add to this, Michael. The back on market. Okay, I'm a seller. I'm selling a property, right? But I'm also on the hook for another one. And I don't need to sell, but I want to make sure I get that other house. Now my motivation's changed. If the buyer backed out on my deal, guess what? You come in, Michael, and you say, listen, I'm going to give you an offer right now. You write it up, do whatever. Maybe you use the listing agent and you send an offer for 50 grand more, less than what I was already in escrow for. Me, I'm like, okay, well, bird in the hand. Yeah, you know what? Yeah, let's do it. Because I don't want the asset no more. I'm already emotionally attached to the new property that I'm in escrow with or that I'm closed on.
Yeah.
So guess what? You came up on a $50,000, what do you call it? Investment.
Yeah. Thank you very much. Yeah. Again, folks, real estate. And the other thing we got to talk about is, I don't know if you saw this. This may not have hit your radar yet, but yesterday, dude, Omar, dude.
Yeah, crazy. I know, 0.75% of interest increase.
Yeah, but the 30-year mortgage rate, the best rate your best buyers are going to get now, 6.18%.
What have we been saying?
It's coming.
7%, man.
Yeah, it's coming, man.
With bad credit, it's 7%.
Oh, with bad credit all day. It might be 7.5 now. But right. The reason I bring this up is we are going to see true demand destruction, right? There are folks in the high desert who 6 months ago qualified for the median home. They just don't qualify anymore. CNBC ran an article with Diana Olick. I don't remember where the numbers came from. Might have been Housing Wire, might have been Black Knight. I forget. But basically, 40% of people that were qualified 6 months ago aren't qualified today. You want to talk about demand destruction, and the high desert in California is going to feel that, right? Your average income is not Orange County income.
No, not at all. It's 100K, 85K. And nowadays that doesn't get you much. It really doesn't. And this is what I'll share with you too, Michael. This makes a great point, because if you're saying 6.18 on a traditional FHA loan, 30-year fixed, that's going to put a lot of people out. Like, they're not going to be, this is where you as a seller, you as a professional are going to have to get creative and give away some closing costs so they can buy down that rate. Give away some closing costs so it doesn't require that much out of their pocket. so you can sell your asset and or investment. So if you're a flipper and you're making 50 G's on a house, well, guess what? Go make 40,000, give away $10,000 to sell your damn asset. 100%. I'm dropping all mine because yes, I was in that same boat of throwing it on the market. It appreciated so much, but I bought so well that I'm able to now compete with everybody else and I still make a profit. You cannot go broke making a profit.
Absolutely. Yeah. Yeah. There's a couple of things. Again, the high desert can be very interesting. It gets hot in the high desert, i.e. the name, right? You think in July, I'm thinking July, August, it might be crickets. It just might stop. I mean, I've seen the housing market in 22 years stop twice. Once in Q4 of 2018 for about a 6 to 8 week period, rates jumped. Everybody kind of got a little wonky. And then obviously March of 2020, the world stopped for lots of things, including housing. I got a sneaky suspicion that transactions, I don't know what is the record for least. I mean, maybe next time we can figure out what's the month you've done the least transactions, because I think you're going to break it. I think August in the high desert, you're going to break a record for least number of transactions.
You might be right, man. I mean, I don't, we're trending as a company, as a team where we're at last month, we're at 31 closed, sure, which is pretty good.
Yeah.
And then this month we might hit the same, but I think that we're probably gonna be 25, 26.
Right.
Then July, because June, there's not much acceptances right now.
Exactly. This is what I'm talking about, man. It's even the bet. I mean, like, it's my show. I can do what I want, I guess. Absolutely. So let's say you did 31 last month. I know you're the best of the best. I know you invest all this, but if the market's not there, I mean, you might do
correct
14 or 15 in August, because August is like hot. Not a lot of people. Normally it's the slowest month of the year. Yeah. Or is it July?
Nah, you're right. August ish,
yeah.
End of July, August, September.
Yeah. It's also the last bit of, last piece of summer. Well, and again, if that happens to you, think about what happens to the entire market. The onesie twosie agents, nothing. I really do think the high desert is going to lock up in August.
I don't want to be a Debbie Downer.
No,
but obviously we have not had a year that looks like this in quite some time.
Yeah.
I mean, even this was prior to COVID. This is 2019. Even 19, we still had an increase.
Yeah.
18, we had an increase. 17, it was still good.
Yeah.
And so this is a different, you're saying Q4 of 2018, there was a stop. March of 2020, there's a stop. Now, question for you.
Yeah.
If you think that, now I'm going to put Michael Zuber on the spot. August of 2022, okay, you think might be a stoppage there, maybe the beginning part of September. Now, question for you. With inflation, with everything, this interest rate hike of another 0.75, and then probably another one before the end of the year to recap or to repopulate the cash flow that was printed out, right?
Mm-hmm.
Do you think that the Feds will do that, and then there's going to be an absolute destruction of the interest rate back down to 4%, 3% to get people to start again?
Yeah, so I get asked this a lot, and I think most people have it right, but their timing is off. Everybody wants it faster.
It's not going to be fast.
No, I believe the Fed is on a path that takes the Fed funds rate, which as of this recording is still 0.75.
Okay.
It will be 1.5. I am hoping, fingers crossed, tomorrow. I believe that funds rate is on a path to at least 4%.
Whoa.
Yeah, at least. And that, in my current prediction, was the summer of next year. It might be the March of next year at this point.
Q2, right?
It's happening fast. So what does that mean? That means the real estate industry, the real estate market that you and I in, is about to get very, very slow. Because if you have a funds rate at 4, the 30-year money could be at 7. It could be touching 8.
7.5.
Yeah, it could be touching 8 for the bad credit folks. So again, housing market is going to slow. This is going to be 1981 all over again, where housing transactions crashed 50%. And in some markets, and it could be the high desert, right? Because again, you happen first and react the most. It might fall 60%. Every market is different. Every buy box is different. Please go do your work in your buy box, folks. But I'm talking nationally, 50%, maybe 60% crash in transactions. We are crushing affordability. We are crushing the move up buyer. Builders will back off buildings. Starts are way down. This market is about to get glacial slow, which is great for investors.
Shit.
What have we been begging for as investors? We want the market to slow
More
down.
motivated sellers.
Yeah. Congratulations. They're coming. But it also makes the exit harder for flippers, right?
Oh, 100%. But this is where you stack your doors, man. Like
terms, baby.
I'm
terms.
Taking it, all terms. I'm taking this from you, Michael. I mean, and being a what do you call a multifaceted professional with buying, selling, wholesaling, sub-to, hybrid type of investor and or agent.
Stack doors.
This is where you go and represent, if you're a professional out there, go and represent a bunch of buyers and sellers, stack your cash, add a flip, make sure it's good. If you're not going to flip, then make sure there's enough spread so you can still get the 30-year DCSR loan, pull out some money, stack a door with your commission checks. This year, I think that this is probably another 2011 and 12 of being able to borrow some money, still inexpensive, right? Because we were paying 12%, Michael, you and I.
I have.
And you're going to be able to get it at 10, at 9.5, 10% with a point or two. But because of that, now you're going to be able to be like, all right, well, I'll bird this one, I'll bird that one. You may not pull out all your money out because the appreciation is not going to be there. Yeah. But you'll stack the door, man. And that's like, this is huge.
I will be stronger coming out of this than going in. Yeah.
This
is the time. Again, when I talk about the real estate market, you got to remember that owner occs make up, roughly speaking, 30 or 70% of the market. And investors are only 30. Over the next couple of years, it might go 60-40. The investors that do the work, the investors that only do great deals, the investor who doesn't give a rat's ass about the cost of capital because you'll do great deals, whether it's 8, 10, or 12, it's time to go, right? And again, I'm adding skill sets. There are things that I don't know that I need to add, like pre-foreclosures and all this other stuff. It's time to go ham. In real estate investors, you've always wanted a slow market. Congratulations. I think you're going to have the slowest market I've ever seen in 22 years. It's a good time coming.
Yeah, I love it. This is good, Michael.
Where can people find you, Omar?
Guys, just follow me on IG at Omar_Alfaro or OmarAlfaro.com.
Thanks, buddy.